Pues ya saludamos en Negocios Televisión a Fabian Frankenberger, DWS Head of Product Specialist Equities. Hello, thank you for joining us.
Thank you very much for taking the time for me.
Fabian, there is a strong trend toward the launch of active ETFs from asset managers and gaining popularity among investors. Which are the benefits or advantages of having active strategies in an ETF format?
Yeah, I mean, obviously, it's about the outperformance component. Yeah, so if you invest in an active strategy, you have the opportunity to get additional returns or higher return, achieving an alpha component with the strategy you're invested in. And if you combine this with an ETF wrapper, which is transparent, which is from a cost perspective attractive, and you have these trading abilities, so you basically have a real-time pricing of your investment solution. That's a benefit as well. But essentially, of course, if you invest in an active strategy, it's about achieving outperformance, an alpha component with your investment, which then will accumulate over time and provide higher returns.
Mm-hmm. DWS is an European leading firm offering ETFs under Xtrackers brand, and currently Xtrackers is launching the first range of active ETF solution. Could you explain the capabilities of DWS in active management and which are the characteristics of these Xtrackers ETFs?
Yeah, the first active ETFs that we launched are based on a capability within DWS, which is based on our DWS QI capability. It's an investment strategy, QI, that stands for Quantitative Investments. So it's a rule-based systematic strategy, which we run really for long term. So it's about 24 years that we have this strategy, managing for different sorts of clients, most of them institutional clients. And the beauty of it is that it comes with a low tracking error. So people that are currently invested in ETFs, they are used to close index investing. So it's an active investment strategy that is systematic, and it comes with a low tracking error, meaning that you do not take too much relative risk investing in the strategy. And strategy has shown to produce attractive alpha over time, so meaning outperformance. So in the past 23 years, 19 of these 23 years, we were able to achieve an outperformance, a very constant delivery of outperformance, and furthermore in a very risk-controlled way with a low tracking error, roughly about 1 to 1.5% per annum.
And Fabian, how do you select the stocks in the portfolio, and what does it mean, systematic versus discretionary portfolio management?
Yeah, probably let me start with the stock screening process. So we apply a 360-degree stock screening process, looking at different characteristics. So it's very data intensive, so a big number of data, big data that we are analyzing, and that's also the beauty of these quantitative strategies. So it does not have any behavioral bias. It's very rational. So we look at the different return drivers of those stocks. We're looking at the current market environment, and then we produce alpha signals on the single stocks. It's a bottom-up fundamental process, primarily fundamental process. Also, to some extent, we're also taking some technical indicators into account. But in the stock screening process, we achieve some alpha signals that we then in our investment process use for a portfolio construction. And as I said at the beginning, so the portfolio construction is designed to come up with a portfolio with a risk control, so with a lower tracking error, to achieve this goal of producing this stable alpha component, which is very important to our clients.
Traditional equity active strategies are usually managed in concentrated portfolios, but in these enhanced active ETFs, how many stocks does the ETF hold, and for which investors are these enhanced indexing strategies designed to?
Yeah, it's a very, very diversified strategies. Yeah, so when we look at our global active ETF, so within the global investment universe, it can be up to 600 stocks, so 250 to 600 stocks, very broad, diversified. but also for the European and the US strategies, it's also a rather diversified portfolio. And that brings me a little bit back to your question before. So what are the benefits in comparison to a discretionary managed portfolio? As I said, so it's a rule-based approach, which is very repeatable in the end. Many institutional investors like this very much. And if you see that we have produced this stable outperformance over such a long period of time, so 24 years, very constantly, it's very repeatable also in these ETF wrappers. So looking at these track records, this live track record, managing real money here, a couple of billion euros. So I think it's a very reliable process. When you compare this with a high conviction strategy, with a concentrated portfolio, you have higher tracking error. So you need to be able to digest longer periods of underperformance. And with our strategy, you do not have to fear about long-term underperformance. Looking at the history of our tracking error, it always recovered quite rapidly.
Can we say the new generation of active management for seeking alpha aren't hate indexing strategies?
Yeah, it's a difficult question. I believe it needs all of the different strategies, but what we increasingly see is that people move a little bit away only from passive investments, also taking some risk, moving a little bit out of their comfort zone, to seek an alpha component, which benefits their strategic asset allocation. And I would view these DWS QI active ETFs that we just launched as a core building block for strategic asset allocation. Comes not with excessive risk, relative risk, and also it gives you the beta of the market, right? So it gives you the exposure. As I said, 3 different strategies: a global strategy, a European strategy, and also a US strategy, which you can easily apply in your strategic asset allocation.
And finally, Fabian, what are the name of these Xtrackers ETFs and the all-in fees charge?
Yeah, the name is quite long, I have to admit, but it's the Xtrackers, which is the brand. It's the Xtrackers World Equity Enhanced Active UCITS ETF, so it's a UCITS. And for the European one, you would basically exchange the region, yeah? So for the European one, it would be the Xtrackers Europe Equity Enhanced Active UCITS ETF, and for US, the Xtrackers US Equity Enhanced Active UCITS ETF. Long name, but I think it's pretty good, describes what's in there.
Perfect. Fabian Frankenberger, DWS Head of Product Specialist Equities, thank you for joining us.
Thank you very much.